Hello everyone, this is CA Devang Kothari and welcome to another episode in my series of Costology. Costology is my series of short videos where I will give you information about various interesting and important terms in the beautiful subject of costing. Before we get on with today's term, let me make some important announcements for you. Well, Unacademy is proud to launch that we have started iconic program for CA final students also. Yes, iconic program, very famous. It is the premium subscription over and above the plus subscription. You have your regular plus subscription and then there's a premium subscription called iconic subscription. We are proud to announce this has been now launched for CA final students also. Now what do you get under this iconic program? Well, under the iconic program you will have live mentoring from subject experts. Now you will ask us that what does live mentoring include? Well, live mentoring will include one-to-one doubt solving. There will be a subject expert appointed exclusively for you and he will be solving your doubts on one-to-one basis. There will be also evaluated test series. Yes, test series you will have that will be evaluated. So a test will be conducted and your papers will also be checked. Okay, there will be printed books that you will be given. Yes, you will be given proper printed copies of the book, not the soft copies. Plus you will also have the regular benefits of your plus subscription. Like normal plus subscription benefits are still there. You can attend live classes. You can also get recorded sessions if you miss the live classes. Weekly tests will be conducted. Study materials will be given to you. Yes, unlimited access you will get. It is not like pen drive classes where you can watch the lectures only 1.5 times. No, unlimited number of times you can watch the lectures. And there will be structured courses in the sense that you will not have assorted free lectures, but there will be a proper full-fledged batch for syllabus completion. Yes, proper syllabus completion batches will be there. Okay. Under the live mentoring program you'll get an extra edge with the live mentoring program. Personalized experience you will be given naturally, and you can discuss your doubts, clarify your concepts with the subject expert that is appointed for you. Also, live queries solved. Live query solving will be done by top experts in the subject. Plus, as I said, evaluated test series will be there. There will be 3 tests that can be conducted. First test will be conducted at the end of 40% syllabus completion. Second test will be conducted at 80% syllabus completion, and the third test will be conducted at 100% syllabus completion. Okay, all these tests will be evaluated by the subject experts. Plus, after conducting the test, the faculty will conduct an analysis class to analyze the paper, or in other words to solve the paper, to guide you how to answer in that paper. Now whatever answer you have written, your written answers will also be evaluated by the subject experts, and that subject expert will give you personal guidance on how did you perform and how can you perform better. Yeah. The pricing for the iconic subscription will be like this. This is for the group 1 subscription, for iconic CA final group 1 subscription, and you can use code YASHAS live to get further 10% discount on that subscription. For group 2 also same pricing you can have, and again you can use code YASHAS live to get further 10% discount. But what I would recommend is you go for a combo subscription, combo of group 1 plus group 2. So imagine all 8 subjects covered in this subscription. You can watch any of the 8 subjects any number of times, and any faculty's subject you can watch. Yeah, so it doesn't get better than this. This is the pricing for the iconic subscription for combo group 1 plus group 2. Again you can use code YASHAS live to get further 10% discount on that. Okay. Okay, so this is about your iconic subscription. Now getting back to our Costology. Yeah. Now my term for today is gonna be a concept called as negotiated transfer price. Now this is the most important concept in the chapter of transfer pricing. Now if you remember my last episode of Costology, I gave you a basic introduction about what is transfer pricing chapter about. Yeah. Now that was the basic introduction. Now in this episode we learned the most important calculation in that chapter of transfer pricing. Yes, the most important, the most famous calculation involved here is about the negotiated transfer price. Negotiated transfer pricing is the method which is followed in almost every practical question of this chapter. Now what does this method say? Well, this method says that the transfer price that you finally decide, the general manager will decide the price. General manager should finally decide a price which is negotiated between minimum TP and maximum TP. So this method involves calculating two things, minimum TP and maximum TP. Minimum TP is decided by whom? Well, naturally, the seller division is the division who wants minimum so much price. So minimum TP is decided by the seller division. It is the price below which seller is not ready to sell. Now, how much minimum price will the seller division want? Well, seller division will want at least a price equal to the variable cost of transfer, because when he is selling units to the other division, he is incurring variable cost to make these units. So minimum price that he wants is the variable cost of transfer, of course excluding any other variable cost that is not incurred on the transfer. So if any variable cost not incurred on transfer, exclude that. Plus he will also require contribution lost. Like if I am the seller, if I am selling units to you by decreasing my external sales, so on that external sales I am losing a contribution. Whichever contribution I lost on that external sales, I want to recover that from the units which I am giving to you, because I am losing external contribution because I give units to you. So variable cost plus contribution lost, if any. Look, not necessary every time there will be contribution lost. Look, I will lose contribution only if I had shortage of capacity. Only if I was operating at full capacity, then because of transfer I will have to decrease my external sale. This is something exactly same as what you have learned in relevant costing. Yes, in relevant costing topic of decision making, you have learned variable cost plus contribution loss. Same thing, the division A will charge. Minimum TP is decided by the seller division, that is say division A. Then comes another term, maximum TP. But before that, what does this minimum TP indicate? This minimum TP will indicate that if I am getting a price less than minimum, if I get any price less than minimum, then I will be incurring losses. Then division A will be having losses as compared to doing external sale. Or division A is not able to recover even the variable cost. So this is the minimum price that division A wants, so that he can recover the cost which he is incurring to do the transfer. Okay. Then comes maximum TP. Maximum TP is decided by division B, that is the buyer division. This is the price above which the buyer is not ready to buy. The buyer is not ready to pay more than this price. Now this will depend on two things. Number one, buyer will not pay a price more than market price. Yes, number one, buyer will not pay a price anything more than the market price, because if buyer will buy from the market, he can get it at this price, so he does not pay anything more than the market price. Market price I am describing as the cost of ready material that he purchased from outside. So if a ready material he will purchase from outside, he will get that outside material at market price, so he's not ready to pay anything more than the market price. However, if the question mentions that you will incur some additional cost on the transferred material, so imagine the material which he gets from the market, that is ready material. Ready means ready to use, but transferred material is not ready. Transferred material will require some additional cost to make it usable. Well, if the transferred material involves additional cost to make it usable, then my maximum TP will decrease to that extent, na? Because then I'm not ready to pay even market price for the transferred material. So in short, I am ready to pay market price minus the additional cost on transferred material. This is the maximum price I am ready to pay, because if I pay more than this, then transfer material will become more expensive than the market material. So this is the maximum TP I am ready to pay, so that my purchase cost, my material cost does not exceed the market material cost. Yes, this is the maximum price I am ready to pay, so that my material cost does not exceed the material cost from market. Or what if material is not available in the market? What if there is no possibility of purchasing material from outside? Well, if there is no possibility of purchasing material from outside, it is not available at all in the market, then does it mean I will be ready to pay infinite price? No. Still, I will definitely not pay infinite price. Then, if there is no material available outside, then for transferred material, you will still not pay infinite money. For transferred material, maximum you will pay that much money such that you don't incur losses, such that your contribution is not negative. So you will pay maximum price as selling price minus other variable cost, because if I pay for materials, if I pay more than this, then my contribution will become negative. देखो, selling price minus material cost minus other variable cost is contribution. Now definitely the buyer does not want his contribution to become negative. So at the most zero contribution is okay. So selling price minus other variable cost is the maximum material price that he can pay, because if he will pay more than this much material, if he will pay, just make some space, if he will pay more than this much material, then his contribution becomes negative. Done? Yes, so maximum he is ready to pay selling price minus other variable cost as the maximum TP. So there are two rules to calculate maximum TP. Rule number one, I name that as the net market price, that is market price minus the additional cost to make the transferred material usable. Or the second rule is net marginal revenue, net marginal revenue, NMR, which is selling price minus other variable cost. If both are possible to calculate, then the buyer is ready to pay whichever is lower. So maximum TP is little more tricky. You calculate maximum TP by method 1, you calculate maximum TP by method 2, and then choose whichever is lower. Done? Yes, so chalo, you have the minimum TP with this, you have the maximum TP with this. You need to practice many more questions to have the hang of this. Plus, while you practice questions, you will get more understanding about interpretation of these things. Chalo, if maximum TP is calculated by method 1, it indicates the maximum price, it indicates the price above which the buyer is not ready to buy, because if he will buy at price more than this, then his material will become more expensive than the market material. Okay? And if the transfer is done at a price more than this second method, if transfer is done at a price more than NMR, then buyer will incur losses. So this is the maximum TP he is ready to pay. This is the maximum TP he is ready to pay to prevent material cost becoming more than market cost. And the second one is the maximum TP he is ready to pay to prevent losses. Finally, he will be ready to pay whichever is lower. These are the rules for maximum TP. Okay? Now that you have minimum TP and maximum TP, so how to decide? Well, this is my decision rule. You should transfer only that much units in which minimum TP is less than maximum. Naturally, if your minimum TP is less than maximum, then only transfer will be possible. If it is opposite, means what? If it is opposite, it means that buyer wants more seller wants a more price, buyer is ready to pay less price, then transfer should not be done. Yeah, so if the minimum TP is less than maximum, only that much units transfer should be done. This is the best decision from the company viewpoint. Plus, under this best decision, the net benefit to the company, net benefit of doing transfer for the company as a whole, company will get the benefit equal to maximum TP minus minimum TP. Remember, this rule is very helpful in many analysis. Like whenever you find that minimum TP is less than maximum, then this is a golden rule. You can check that in any question, that the net benefit to the company because of transfer is exactly equal to the difference between minimum TP maximum TP. Because of the transfer, company profit will increase by exactly this much amount. Because of transfer, company profit will increase by exactly this amount, minimum TP minus maximum TP. This is the net benefit to the company because of the transfer. Yes, anyways, this was just, as I said, a short concept there. For more detailed concept, you need to study the entire chapter. Yeah, that's all. Thank you very much. I hope you enjoyed the session, and until the next episode, bye bye.